Welcome, guys, back to another video. This is Jordan with Simple Trading Success. So, in this video, we're going to talk about a fundamental key aspect that I believe is going to be one of the most important videos for you to watch when it concerns your charting, okay? Your technical analysis. So, in this video, we are going to talk about support and resistance. So, what is support and resistance? Support and resistance, to me, simply is the pause in the market of a trend, right? Whether an uptrend or a downtrend, the market's going to come to these areas where it's going to make these stops before it either continues in that direction that it's already going, or it makes a reversal into another direction, starts a new trend. But it's going to be a pause in the market. So let's talk about this. So my definition of first we'll talk about support is this: a price level, a downtrend is expected to pause due to a concentration of demand. In other words, I would also call the support a floor. So what do I mean by this? Let's go to the chart. I'm going to show you exactly what I'm talking about. So we're going to go to Euro USD, Euro dollar against the Euro, against the US dollar. And currently I'm on a 4 hour time frame. Okay, let's do this. I'm gonna go up, and I'm gonna go to a daily time frame. Okay, so I want you to look at this daily time frame, and if you notice what the market has been doing, let's kind of go back. We can go all the way back here to what this is 2014, and I want you to look at this. The market since 2014, if we were to follow this trend, these highs and lows, you'll see that the market has been doing what? The market has been basically downtrending. Now we don't know what the market's going to do currently now, but if you look since 2014, the market has just been going down. It's came up, make its peaks, but it's going down. So this is the trend, right? And according to this definition, as I was saying, a price level downtrend is expected to pause due to a concentration of demand, meaning that as this price was going down, it was getting to lower prices where buyers were coming and saying, "Oh man, this thing is low." Imagine that you had a pair of shoes, let's say a pair of Jordans, right? And those Jordans, they were marked down to, let's say, $100, where that shoe might have cost about $200, and this price of the shoe came down, and there were people that were watching this, buyers in the market, and said, "Oh my God, these shoes are 100. We need to hurry up and buy these shoes, so we can resell them." So they started buying them, and then market. What happened as a result of them buying, they started buying up these shoes, right? And what happened? The demand was so low as that happened. We started buying. They started buying up the shoes, and now as that happened, it became an increase in supply because as buyers began to buy it up, the manufacturer said, "Oh my God, we got to actually create more shoes." So I'm just giving an example. But look, what I want to really show you is this. So this is what I mean by where it came as demand. So demand, the price came so low where buyers said, "We need to step in and we want to buy because we're getting a deal," right? And so if I go to my left hand side of my trading view, on the top, you see an icon that says, you see trend line, right? I have a line here that says horizontal line. And I want you to see that as the market came down, it hit these areas of support where it created like a floor. It hit these areas of support where it created a floor. And if you see, I'm putting my red lines to show you this. As the market trended down, there were these areas that it hit of support. Okay. In 1 second, I'm going to show you this. Really don't like this. Let's see. Okay. So as the market came down, here, broke this level, came down. You see these two red lines. It came here, and let me get one of my tools to show you this. It came here, and it hit this level and rejected. And it came back up, and it kind of almost hit this level again. Well, let's say hit this level again, and it rejected and went up. It went up to this level, broke this level, and hit it, and kind of went up and down, went back and forth. Kind of dipped, came up. So this was a floor for a very short time, and then it came down, hit this floor, then rejected, came up, same thing. Remember this floor over here? Remember this floor here? Well, guess what? It came up again and did it again. It kind of made these short pauses where it came, and these became floors. Now, I know what you're probably looking at too. There's a lot of ceilings, right? And I'm going to get into that in a second. And you can see the market came down. Oops. Market came down. Hit this area, became a floor. Then finally broke the floor. Boom, came down. Came back up, test the floor. Became a ceiling for a very short time. Broke, became a support. And now currently what the market is doing, around the time of this video is being recorded, the market, this has been a floor. The market is above the floor. So we could possibly see the market continue up because it's bounced off this floor, or you come back down, test this floor again, and we can see if this floor will hold and it go back up, or if this floor will become a ceiling. So these are areas where the market came as made these trends, as making this big downtrend, right? Right, it's creating these levels where of support where floors were created. Now, let's talk about this. Not only is support a price level, a downtrend is expected to pause due to concentration of demand. Resistance now is a price level, an uptrend is expected to pause due to a concentration of supply. Meaning this. Let's go to this, guys. Let's go to this. Meaning this. We talked about those Jordans, right? Those Jordans came down. There was a big demand, right? People brought those low prices. Then the market started to shoot up. And it started to hit these areas where it rejected on the top because there was a concentration of supply. So meaning the currency grew so much, there was so much supply that they said, okay, wait, this stuff is getting too expensive, or we're getting too much of this particular asset. We need to liquidate and get rid of it, right? We need to sell a lot of this so we can get our money back because we're holding too much merchandise, like those Jordans, right? Imagine you had about, 10 pairs that you could sell for $1,000 each because the demand is so high because there's not a lot of them, right? But now imagine you have, instead of 10 pairs of Jordans that you could sell for $1,000 a piece, now let's say you have about 1,000 pairs. Now it might be a little difficult to sell them all at $1,000 a piece because there's so many. So people say, oh, I can get it at a better price. So they say, okay, instead of $1,000, I'm willing to buy those at $200. Right, so now what happens? You have such a more big supply. You say, okay, I got to get rid of these things. Let me sell them off. Because I know if I sell a whole bunch off and I only have a few left, and I say, well, I got the last 2 Jordans in the world, or the last 2 Jordans in this country, and the last 2 Jordans in this region, people say, oh man, I got to get those. I'll sell them to you, but now they're back at $1,000, right? And so this is where we talk about demand meeting supply, right? And so let's go back to this. So now, as you've seen where I've highlighted these areas of support, right? Now you're going to see that there is a similarity where some of these areas of support were also resistance. Like here. We see in this area right here that this level had became support, right? It kind of came up, hit this a little bit, became a tiny ceiling, kind of dipped here, but then it finally became support, came a floor, came down, and then guess what happened? It finally broke, and then Sorry guys, let me draw my tool real quick. And then what happened? It became a ceiling. Okay. Let's I'm gonna change this color so you can see this a little better. Okay. So let's make these I'm gonna make these magenta for right now. So now you see these areas where, or actually instead of magenta, let me make it purple. Okay. So now you see these areas where the market, those levels that it used to be a floor, which I have highlighted in orange, now they became a ceiling. They became resistance. Do you guys see this? This whole area hit right here, it fell, and then it started to drop. Then we're seeing it come up. Let's see, the floor, right? And then not only was it a floor here, right? It became a floor for a very short amount of time, broke, and this became a ceiling. All right? And we can kind of see this on different areas here, even right here, right? We see right here, market came, this was a floor, broke, became a ceiling. This was a floor down here, broke, came up, tested the ceiling one, two, three times, it finally broke and became a floor. Right? And so we see all these areas where these major levels where market was a floor and a ceiling. Now I know you're probably asking, okay, well, Jordan, well, how do I determine where to draw my lines? How do I determine which floors and ceilings, right? Because you perhaps probably see maybe a floor here in the ceiling. You perhaps might see a floor in the ceiling here. You perhaps might see a floor in the ceiling here, right? You perhaps might see a floor in the ceiling here. And here's the crazy thing: I'm only in the daily. Imagine if I go into a 15-minute or 5-minute time frame. I'm going to have so many lines because there's so many floors and ceilings. There's so many that are constantly happening in the market. Now, what I want to show you is this. One of the things to your trading, advantages to your trading that's going to help you get some of the greatest, best places to get in the market is looking at these major levels or major areas where price had agreements. So I call these price agreements. And I'm going to talk about right now, we're going to start to get into a little deeper into support and resistance. Right? I'm going to talk about three types, I should say, of support and resistance, of how you can see, okay, what is the market doing and where are major opportunities in the market that I can get involved in, okay? And the question is, yeah, how do I draw my lines? How do I know where to draw them? And how do I know where the market is going? How do I know where the market could potentially touch? Well, we're going to talk about that. If we pay attention to what I call three types of support and resistance. And I'll have other videos going deeper into each of these things, right? But let's talk about the first, static levels. Static levels are horizontal support and resistance, simply. Meaning, all those lines I had showed you, where I showed you where the floors and the ceilings were created, those would be static levels, meaning that they don't necessarily move once you kind of set them, right? You kind of set them and then you use them as areas where you see the market test. Okay. Now, each time frame will have their own levels, static levels of support and resistance. And I want you to really think about the bigger the time frame, let's say, the bigger the floor or the ceiling. The smaller the time frame, the smaller the floor or the ceiling. Meaning, for example, if I was in a stadium, right, where they were playing basketball, where a basketball team came and there's a lot of people in that stadium, most likely the construction of that building is going to be that floor where the bleachers are, where people jump and they're playing basketball, is going to have a very thick floor under it. It's going to have a lot of beams, right? Because there's a lot of people in that room. There's a lot of activities, a lot of jumping, a lot of weight. So that floor has to be able to hold, right? has to be able to hold all that, as well as there'll probably be big ceilings, right? There might be big, thick beams on the top, right? Because maybe it's a stadium, right? So it's gonna have a big architecture, right? So let's equivalent that to something like a daily or weekly time frame. Now, let's say we go down to a 5 minute, or let's say a 3 minute or a 1 minute time frame. Now we're talking about a ceiling or floor that's like plastic. So imagine a big piece of cardboard, or a plastic case, right? So now you're seeing how that floor is going to be weak. Imagine you stand on a plastic floor, right? Now, if you had a good construction, it might hold for a little bit, but it's not going to hold long compared to you have a big wood floor with a lot of steel and a lot of beams, right? And so what happens as you go down time frames, you see the floors will get thinner. Now, does that mean these floors won't hold? No, they can hold for a certain amount of time, but you'll see that price will be a lot more erratic at those levels. So let's talk about this. Static levels, horizontal support, and resistance. Now, I want to show you one trick that I use when I know some of you probably asked the question, well, okay, Jordan, well, where do I draw my lines? How do I know where to draw my lines? How do I know where to draw my lines? Okay. One thing I use is this. I'll go up and I'll change from candles, my candlesticks, to lines. I'll go to a line chart. So instead of a candlestick chart, I can switch this to a line chart. And now what I could do is I could take my horizontal line and I could look for these areas of price agreement, meaning this. Look at this. This is an area where I've seen multiple touches. Market came up, touched here multiple times. This became a floor for a little bit, then became a ceiling. Market came here, touched multiple times, right? If I go back, we'll see market came here, touched multiple times. It did a dip, it did a dip, it did a dip here as well, right? But this is the area where it looked like the market kind of like there were big ceilings and big floors. Now, I know there's some other stuff here like dips and things like that, so we can catch those, right? We can catch those, right? And so we can see now, okay, market also dipped here, touched here, touched here. Okay, we can actually see market here, touched here as well, right? So we're starting to catch these other levels, right? We have what, one right here. Let's check that out, right? And so these are major levels where we see the market touch. And then we can even go down. These are kind of ceilings according to how the market is moving now, right? And then we also had some bigger floors here, right? We had some bigger floors here. So let's do this. I'm going to make the floors green and the ceilings red, right? And so now we had some bigger floors. So let's see. We didn't have too much back here, but we had a couple of touches here. 1, 2, 3 touches here, right? We have multiple touches here, right? I could probably even bring this up a little, like here. You can see how the market kept touching here, right? We could even see how we even had some ceilings here and some floors. It's a little hard to see. I don't really like drawing that here because you see how it's very, look at this, erratic. It's floor ceiling, floor ceiling, floor ceiling, floor ceiling. But it's there, but they're not as clean and clear as the top and the bottom, right? But this is currently where the market is at, right? So we can kind of see these areas where market has touched multiple times. 1, 2, touched here, came up a little bit, touch, right? And so we can see these areas where market has created ceilings and floors. Now, if I go back to my candlestick chart, now you can see how you might be able to see it a little better. It kind of makes more sense. So you can see these areas of market where the candles kind of got trapped and then they started to reject. Okay, so this is what I would consider static levels of support and resistance. They're just horizontal levels that you kind of just wait for these areas, the market to come to these areas and test and see what it's going to do. And so once you kind of get these confirmations, These are the areas where you want to take trades at, right? Now, I know you might be asking, well, okay, well, Jordan, well, what do I do here? What do I do here? Well, all in this area, right? What do I do all here? Well, you can either don't trade there and wait, or you're gonna have to go down to different time frames and kind of see where the floors and ceilings on those small time frames, so I can see where the areas are at to trade, right? Because they might not be as clear here on the bigger time frame. I can still see some, but I want to tune in the smaller time frames to really scale in. Now, so we talked about static levels, right? Let's talk about static levels of support and resistance. Now let's talk about this trend line. Now I'm gonna have a whole video specifically on trend lines, but my philosophy might be a little different from a lot of traders. A lot of traders might say, "Well, trend lines are trend lines. It's the trend." But the way I see the market, and to me, trend lines are support and resistance. But what they are, they're just diagonal support and resistance. That might be out there for some people, but check this out. They are diagonal support and resistance. Look, what this is. This would be right here considered a trend. Okay. Now, what did I just do here? Let's make this a little thicker. Okay. 1 second. I want to make this a little thicker. This is on a daily. Okay. So what happened here? The market the market created these areas, right? We talked about of ceilings, right? We see the market had these peaks, right? And knows the market had these peaks, then had these other peaks, 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 peaks. But there were areas where the market, when it peaked, there were areas when the market peaked that I was able to kind of find where the support and resistance was, where it touched multiple times. You see that? Market touched multiple times, touch here. Now I had peaks here, right? But we would have, if we were looking at these peaks, this would have to be a whole new different trend, right? So this could have been a trend around this time. And then we saw that the market broke. So what happened? This became a ceiling. It was a ceiling, a trend line ceiling, a trend line resistance, a trend. You know, we can actually call it this a trend resistance, a trend resistance, a trend ceiling. You see that? Hit this ceiling, came down, hit this ceiling, rejected a little bit, then it broke. Then this ceiling became a floor. This ceiling became a trend floor. And now it's going. And now what happened? It broke this regular horizontal static line. And now it broke this, it hit the trend line, excuse me, one here, two here. Hit this trend line, came down, hit the trend line. Now it made the trend line into a floor and it's going up. So this market could keep going up and set a new trend. And so this is what I would call trend lines. This is why I say trend lines are support and resistance. They're just diagonal. They're like staircases. So I want you to think of I want you to think of the support and resistance, supportive floors, resistance are ceilings, trend lines are stairs. Trend lines are staircases. Now let's talk about the third type of support and resistance. Now, this type is not technically I would say a tool in your charting. It's an indicator, right? And so let's go into our chart. If we look at our chart, on the top, we have what's called indicators here. And we could actually go to indicators and type in something. I won't get too deep because there's different type of MAs. We have SMAs, MAs, but let's talk about the basic type of MA, which is a moving average. Okay. So, okay. So let's talk about the moving average. Now I'm gonna get a SMA. Now there's actually two different kind of SMAs because there's a smooth moving average, but I want to get just a simple moving average. Okay. Now I don't want the strategy. I just want the actual, just the just the standard moving average. So I'm gonna come down here and where are we? Okay, here we go. Simple moving average, simple, right? And I'm gonna add this to my chart. And you can see how it has added right here on the top. And I'm gonna change this color so you guys can see it clear. I'm gonna make this color bright yellow. Okay. And so now, as I was saying before, moving averages, these are what I would call dynamic support and resistance that move with the price trend, right? So just as we talked about trend lines, right? A trend line, for example, which what I want to call in this case, illustration, is a trend support. So let me actually move these arrows for a second so you can see this. So what I want to call this is a trend support. As you can see, market actually had multiple touches here. Now, we'll get into this later in the trend line video, but one of the things with trend lines, you want to make sure they have at least two touches. One, two. You see three kind of dipped, came up. If it doesn't have two touches, it is not valid. Okay? But let's talk about this now. You see the trend line that I kind of drew from down here, right? In the yellow. But now you also see these little white squiggly lines, right? Now this is a moving average, a simple moving average, and it has a length of 9. So this is a 9 moving average. Now, what does that mean? So this means this. I want you to think of that whenever you see a number that is attached to a moving average, I want you to immediately think of candles. So for 9 SMA, simple moving average, this means that for the previous 9 candles, it is given an average. It's doing a calculation of the average movement in price of the previous 9 candles. So, for example, if we were to take, let me get my tool here again. If we were to take this candle here, this big green candle, right? If we would take this big green candle, the previous 9 candles, what's it? 1, 2, 3, 4, 5, 6, 7, 8, 9. Right? That means with the market, these previous 9 candles, right, shows how the moving average was reacting. Okay, so it's taking the average of these 9 candles. You can see that it's very tight. And so because that you see the market is constantly going up, constantly going down, constantly going up, this moving average is very tight because it's kind of hard to say, okay, is this going to go up? Is this going to go down? Is this going to go up and whatnot? And you can see that as these 9 candles are forming, the moving average started to decline. And then we had this big candle, right? And then the moving average started to go up. So, meaning this. Okay, meaning this. The past, in this green candle, the past 9 candles, they closed bearish, right? But this candle closed bullish. So all of a sudden, the EMA starts to change. and it starts to go up because this candle gave a prediction that the market was gonna these candles, the next 9 candles, from especially from that last candle because it's so strong compared to these, it started to give a projection going up, right? But look at this. This let's take this small green candle. If you notice, the moving average didn't go up. Why? Because there wasn't enough volume. There wasn't a big enough candle like this candle project that it was going up. So the MA kept going down. Same thing you can see here, right? On these candles started to go down, and then we started to get some big movement here. And so now the MA is saying, okay, these the previous 9 candles they closed. This last candle closed really bullish, so it started to move up. Now, again, 9 candles is really not enough. It's not really great to kind of have a good projection. That's why you see this type of dynamic support and resistance and moving average. It's really hard to follow, right? Because it's not enough calculations. 9 candles is not really enough. But what happens if I turn this into a different number? Okay. So what happens when I'm gonna change this 9 to a 200. So let's say instead of the the close of the previous 9 candles, let's talk about the close of the previous 200. Now watch the line. Watch the moving average line. Watch how it changes. You see that? You see that? Look at the change. So now as you can see, this line is kind of going through the candles now, instead of kind of riding with it, right? Because it's reading that previous 200 days. So it's very kind of erratic, as you can see, especially when we're talking about within the zones. Look how the moving average reacts when it's closer to the ceiling, the floors. Look how it reacts when it's closer. Do you see that? How the candles most likely will either sit a lot more clear or firm on top of it or on the bottom. So this responds as like a floor and ceiling as well. The only difference is that it's moving with price, right? Now let me show you something else really quick. All right, so let's talk about this. There's another EMA that where we have the SMA, which is simple moving average. We have something called the EMA, and I won't get too deep into this. It's a moving average exponential, so exponential moving average, right? And we add it to our chart here. So you say SMA, EMA, and I'm gonna open this and I'm gonna set it to the same exact thing, 200, and we're gonna change the color. I'm gonna change it to let's see, like lime green, so you can kind of see it. Actually, I'm gonna change it to a more bright yellow. So we have the other one, which is white. So we got the yellow one, which is the EMA, and then we have the whiter one, which is SMA. And now you see how you can kind of see how close they are. However, you can see how the let's say the yellow, the EMA, looks like to me is a little closer to price, right? So what happens is the exponential moving average? It's from my study and research, my application in this is that the EMA is a little more current, is a little more applicable to current price, how current price moves, where the SMA, the simple moving average, the white one is a little more applicable to, I would say, price in whole. So they're both applying to the previous 200 candles because we have 200 EMAs. They're both applying to previous 200 candles. However, let's say the SMA, simple moving average, is applying more to actual the data and the price of the last 200 days, where the EMA is applying a little more current to those 200, but also current to current price and where it's going to go. And that's why you see the EMA is a little closer. Okay, so neither one of them are good or bad. It just depends on you. how you like to trade them, and we'll talk about this later. Developing your own strategies and seeing which ones work for you. Okay, and so of course on different time frames they will look a little different, and you'll see which one works better for you depending on your time frame and your style of trading. But my point is this: is that moving averages are like support the dynamic support and resistance. Look, the trend is here, right? You can see this trend, it got broke. And you can kind of see just as my static trend line or static trend resistance, the market is following it. You see this came up here, hit, dropped, kept coming. It didn't really hit this, but you can see how even though it's under the trend line, it kept coming down. The same thing here. It's under these EMAs. It's under these dynamic support and resistance. You can see I was under that and it kept falling. As soon as it started to broke this dynamic support and resistance and this static trend, it started to push up. And that's currently what's happened now, right? And so I was to continue down. And now what's happening is we can see that it's creating a brand new trend, right? You can see that because previously we would have had this, the touch, broke. You thought it was going down, but it kind of created a new trend support, right? So we're looking at it bouncing between this area. It could break here and then continue up, or it could bounce here and bounce between here, keep going up, or it could bounce here, break this level, come down. But notice that, you can make so many trend lines and support lines, everything. It will get confusing. And so what I like to do is best to just keep it simple. Keep it simple. Find the most major levels, of resistance support, and make your chart simple. And guess what? Wait for the market to come here. Wait for the market to come to these areas. Wait for the market to come to these areas. Then take your trades. But wait for the market to come to these areas. Now we probably could get a nice, let's see. I think this is a good level here. Oops, sorry. I think this is a good level here that if you wanted to look at waiting for, let's see right here. Right? Wait for these levels to happen. Like currently this is about to happen right here. This is about to happen. And so we're not gonna talk about in this video, but we're gonna get another video. We're gonna talk about looking for the confirmations. We're waiting for this to come touch this area and see how it responds. Is it gonna reject where we can look to get into sells and the market shoots down? Or is it gonna break this and we're looking for confirmation the market shoots up? Right? But we want to wait till it gets to these levels. And why do I say that? Because in my journey doing this, between these areas, this area to get in, these areas is a roller coaster. Some people might enjoy roller coasters, but you get in here, then this thing might go down, it's gonna go up. You go, oh my God, what is it doing? You're gonna have a lot wider stop losses, right? So you wanna do one thing. And what I like to say is this. Wait. Wait for the levels to be hit. Wait for the levels to be hit. And this is the last thing I wanted to show you guys. Now, some of you guys, I showed you earlier, right? How, okay, when I'm not sure where to draw my lines, what do? I go to a line chart, right? For example, let's look at price, where price is now. We've seen price come up here, touch this multiple times, right? Actually, let's not even look at price. Let's go back to this line here. we seen price touch this area, right? Came a floor, floor, ceiling, floor, floor, floor. But look at this. It became a floor to ceiling here, but there was a little dip. There was a little dip. And look, it touched right there. Boom. And we kind of see when we zoom in, we can see it that it became a floor. Let's see this. We can see that it became a floor, right? Became a floor here, and then it became a ceiling. And we can see these multiple touches. So we can see that it didn't just hit this level, but it actually had another level. And this is what I want to show you is that when these kind of things happen, you can start to see we start to create we start to create these areas that I call support zones. Support and resistance zones, I should say. And what are these? These are areas of price agreement, right? And in these area of price agreement, you'll start to see that there's price fluctuation. They're determined by price fluctuation, determined by order flow, which is basically people getting in the market, setting buy and sell orders, right? And this is where the price is fluctuating, right? Buyers and sellers are battling. Sometimes we also in these areas it could be from manipulation, meaning that the banks, the institutions move the market more to stop people out or to manipulate, right? To confuse buyers and sellers. We also can see these areas where the market comes to these areas and we see big wicks, and you can see where markets getting exhausted, saying, okay, you know what, the market, let's say, is trying to sell in this area, but the buyers say, no, 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 we're going to buy, and the sellers have no more strength, and the market goes up. And so what happens is that these levels, they start to turn into support. So let's go back to our candle chart. They start to turn to support. So we start to see these areas. We see the market come down, hit this area, bounced up, came a floor for a bit, then came down and said, oh, it looked like we was about to break the floor, right? But it didn't. Then become a ceiling. It came down to scare us, but then it came back into the floor and came back up, right? Then it came back down, like testing the floor again. So probably a lot of people say, oh man, yeah, this thing's going back up. They got it for their buys. Boom. You might have got a little problem. Then it said, boop, come back down, test. Nope, we're going to take you down. And then ceiling started happening. Boom, 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 boom. And market went down. And so now there are things that we could look at to determine, okay, should we have took the buy or should we have took the sell, right? But these are the areas where you'd want to be looking at, right? And then even if we scaled in, now we can start to see that, okay, there was clearly, look at this, there was clearly a ceiling and a floor here. Floor, ceiling. There was clearly a ceiling and floor here, right? Look at that. When this was created and right in this candle, this would have been a beautiful trade to take. Boom. Right? And so let's go back to the line chart again. And so now you can see again what happens if I came in here and said, okay, look at this. Multiple touches again. Boom. Guess what? I just created another zone. Look, zone. And these zones are beautiful places. These zones are beautiful places to take your entry. These zones are beautiful places to take entry. Now this is a daily, so it would be a really big stop loss, but normally we'd be setting our our entries exits on a small time frame. Unless you're like doing a swing trade, you're looking at risk this many pips. But we'll be doing trades where we're not risking that many pips. But regardless, look at this. Look at the ratio. We have this is gonna be easy 2-to-1. This could even been a 3-to-1 risk to reward. And so if we go back to the candle, look at this. We can see how the market, we would have got in, would have broke the zone. So say we would have got in right here. Boom, market's gone. It didn't come back up. It came touch here, but then it rejected and it dropped, right? And again, we're going to talk about another video confirming these entries. But they got how it's better is to get in there than if you were to get here. What happens if you got in right there? Now you get in, the market's going back up, and it stops you out. It takes you on this roller coaster ride in profit and drawdown and loss and profit and loss and profit. You're like, oh man, what's going on? Well, you didn't wait. Wait for the support and resistance. I'm telling you, waiting is going to be your best friend. Just wait. Wait. Wait for these areas, right? And I'm not telling you have to wait on the daily because there's other time frames. You know, we can scroll and look at other time frames. But what I'm saying is that wait. Wait. Trade in the zone or out of the zone, right? But don't trade between the zones. And when I say between the zones, I mean between, let's say, your support and you have your floor, your ceiling here, then you have your floor here, right? These are areas where you'd either want to be taken or when they exit, but you don't want to be taken too far, right? So you want to be taking your trades near these zones or even in these zones, right? As long as you have a good stop, right? I normally find it best to wait until it exits the zone, which we'll talk about later. But my point again is wait for these areas, these floors and ceilings, guys. Oh, I'm sorry, I thought I was showing you the charts. Look, wait for these areas, these floors, right? You could take it here at, in the zone here or in the zone here, right? But don't take it between the zones. This, no. Unless you've identified this on a smaller time frame, but know that you want to make sure that you know where your risk to reward is, and you can probably get out sooner than if you're taking long, bigger trades, right? This is a daily, so it's different. But wait for these areas. Wait for these areas. Wait for the market to come to these areas. Like I said, normally it's best to wait until it exits the zone, and then you see for the confirmation if it makes sense to either buy or sell. Like even here, right? Wait for this zone to exit, and you can either buy. Most likely exit here. You're gonna be looking to sell, right? And so it's gonna be certain confirmations looking for. And so what happens when that happens? A lot of times you go straight into profit, or you're gonna clearly see if you were wrong. You're gonna see it right away. You're not gonna have to be here, got in the trade here, and you're on a roller coaster. Look at that. Because you don't know which way it's going. But here, down here, it's a little more evident. You can kind of see what's happening. Okay, if it rejects here in the zone, it might be testing the zone and then go up. Okay, then we're gonna set our stop loss. Sorry, wrong one. We're gonna set our stop loss so it makes sense. So we know that if it exits the zone too much, we know we were wrong. And this is not even gonna buy, or this trade is just not ready. And we leave it alone. But you see it exiting, you're right. And this thing is gone. Look at this. This thing is gone. And the crazy thing is it even came back. It still didn't set your stop. It still didn't hit your stop. It would have kept going. Look at that. And I didn't even look at any confirmations. This is just me simply drawing up these areas of support and resistance. Right? You can see how the market moves. So we could be looking to see this market go all the way to this green line. Right? If you would have got here, this is profit. And then what? It could either come reject, come right back down, or it could come up and break this and continue up. But regardless, we didn't wait to get in the market anywhere in this area. We got in at the beginning of the run, or we got in towards closer where the rejection is. Now, I'm not saying you're going to be able to get the lowest all the time. You know, we might have needed to get in here, let's say. However, it's way better than getting in here in the middle of the zone. You want to get as soon as the exits are in the zone. Okay? So I hope that helped, guys. So support and resistance, that was a basic hope that was a basic understanding, a deep understanding of how support and resistance can be your best friend, and I help you wait and find where the best entries are for you. You know, instead of, yeah, we could talk about liquidity and we could talk about where the banks are and all that stuff. We're going to get into that. But before even understanding that, where are the ceilings and floors, guys? Where are the zones? Where are the ceilings and floors? So, guys, please do yourself a favor. I want you guys to go ahead and do some practice, look at some pairs, and I want you to just mark them up. Just strictly what support and resistance. Even if you don't do lines, even if you don't do zones, I mean, let's just do lines. I want you to do them on bigger time frames, and I want you to find these major areas. Because you know what I do a lot of times? I just find these major areas, and I say, okay, this was created from previous data, from the previous stuff in the market. And so I'll say, okay, you know what? This is great. I'm going to wait till this comes here. And then what I'll do is I'll just say, I'll set my alert. I'll set my alert. I'll put alert right there. And here's the thing. If I wanted to be really picky, I'll say, you know what? To me, look at my line chart again. For me, this is a way more clearer area of support and resistance here to me than here. Why? Because look at this. You have so much noise right here. In and out, in and out, in and out, in and out. But here, every time it came here, reject. Reject, reject. Okay? It passed here and came before, then became a ceiling, right? But I know that this area is very clear. I would have waited for the confirmation under the take, which was right here. So to me, this level right here is very clear. So if I want to be really picky, I can just come here and set this and put an alert. And I'll wait for the come market and I'll get a beep to my phone. Your USD is here. Okay, yeah, I might have to wait a couple of weeks or whatever. Now, this is a daily, so it's going to take time for it to get there, right? But if I go in a 5 or 15 minute or hour, you know, I can find areas there where the market will come there a lot quicker. You know, where I can get certain time frames. I can look at certain time frames, and I can get it where the market will come up there within, you know, let's say hours or days, right? And so this is what I'm looking to do. I'm looking to find these major levels, these major areas of a floor and ceiling. Where are the major floors? Where are the areas where the market touched multiple times to create a floor, created a floor, or created a ceiling? And that's where I'm looking to wait. So this is a beautiful area to wait. This right here is a beautiful area to wait for a trade, to wait to see what the market does. Now this is on the daily, so again, this might take a few days to get up there. You know, or depending, we might have some serious news and it might get there within, you know, a few hours when the market opens. But this is definitely an area I'm looking for something to happen, a break or a rejection, or even manipulation before it does that, right? But I'm going to wait for those confirmations. We'll talk about that in the next video. So, guys, I hope this helped you understanding more in-depth look at support and resistance. And thank you. I'll see you in the next video. Let me know in the comments if this helped you. All right, peace.